Hey everyone, time for another review. This week we'll talk more about the Q3 since the quarter is ending next week and what's likely to happen there. And the simple answer is continue rallying. But in the short term, basically anything is possible, and I'll explain why. Now let's look at Q3. So everything is about liquidity, and we need to know what liquidity is going to be like in Q3. This was Q1, the Treasury borrowed 760 billion. Uh, then in Q2, we borrowed, it borrowed 243 billion. So what's Q3 going to look like? And the answer is they're going to borrow 900 billion. That's more than Q1. And let's look at what happened in Q1. Q1 was 10% up for stocks, 11% on SPY. And Q2 is, oh, sorry, this is Q1. Yeah, this is Q1, so 7% on stocks. Looking at RSP, SPY, my bad. So Q1 was 10%, Q2 was 4%. But because in the short term the bias is for the pullback to continue, I think it will close lower than this. So liquidity matters. We had 760 billion in Q1. We went up a lot with virtually no pullbacks. If we look at the monthly, this is Q1, Q1, January, February, March. So all green, no pullbacks, and in April, when the market realized that the treasury is not going to be as stimulative, we had a pullback and then continue going up. But overall, liquidity matters, and the fact that the treasury didn't issue as much in Q2 had an impact. We even had negative bill issuance for a period here, and this matters. So Q3 we get even more than Q1, so 900 billion. That this is likely going to be stimulative. But in the short term, the market can drop a lot, and it doesn't matter if the bubble pops or not. What matters more is volatility. And when we look back at the 2000 period or 2008, this is 208. There are multiple pullbacks that the bubble won't end on a single move down, or uh, it can end like that in Qs, which is when up the most, but it doesn't end in a single move. We have multiple correction, we have increased volatility along the way. So this is 2008, and going into 2000, and this is the bubble, but going into this, we had multiple corrections of various degrees before we actually crashed. And the crash was actually here. The market topped out way, way before the crash. What is considered to be the crash is what happened here. This, this is the crash. We were already down 24% uh, before that happened. And in the 2000s, on the dot-com bubble, multiple corrections here. Like we have 16%, 10%, 10%, 14, 15. You get the idea. This was actually more. This was 22. So what will happen as we get closer to the bubble popping is we're going to see more of this, meaning the market goes down 10-15%, we recover and even make new highs, and repeat a couple of times, then we top out. The top was probably just here. This was actually the bubble popping on Nasdaq. This was the Nasdaq dumping here, but you can see SPX didn't really nudge until much later. Let's put QQQ on top of it. because because it was the bubble that shows the popping better. See? So September we actually had the pop, uh, even though March is the one that is called out as the moment when the bubble popped. Okay, so going back to this, imagine what would happen right now if we had a 15% correction. People would go fucking crazy. It would be like the end of the world. And this is a normal part of bubbles popping. Like it's not going to go down 15% from here unless there's some unforeseen event that happens. But uh, that's very, very unlikely to happen. So we will get this type of correction more and more often. And that will be a sign of the bubble popping. Basically, we do like a curve thing rather than uh, this. And the possibility of going lower is still there, and it can come out of nowhere, like some recessionary data or something like that, and people get scared. Um, okay, so let's now we have a combination of two things. One, very overbought names price wise. We just had a reset positioning from OPEX, which will take away supportive flows. We go into the liquidity drain for end of quarter because we haven't started Q3 yet. We're still in Q2, and usually we have liquidity drain at the end of the quarter, and we have drops in towards the end of the quarter in the market. Like for example, December, small pullback, uh, March, end of March. That's when the weakness almost realized and we started going down. So this could be a very similar setup here, in which we're getting to the end of the quarter, we see some sideways chop, and then we do a correction going into uh, July OPEX, and that's basically how long it should take to clear out. July OPEX is the 19, so we could continue down, go a bit sideways next week, and then realize the weakness and go down until here. Go down until this price point, because the liquidity injection from Q3 is not going to come instantly. It's going to come slowly. The market will correct. People will realize, okay, but they're going to pump a lot of money. Okay, let's buy. We go long, we go even higher, and so on. So this is perfectly reasonable to happen. But at the same time, maybe this gets front run and we just go up. We go down a bit more next week, and then just at the month turn, we just go crazy up and don't never look back. Uh, it's difficult with bubble scenarios in which things are irrational. Now, the the situations we're in, that like I mentioned, is that we have a bunch of names at all-time high price wise. They got resets, so supportive flows are going away. Something like Microsoft, if it goes back below this trend line, could really correct a bit further. This is not much, it's like 10%, 8%, even less than that. And it's perfectly reasonable to get this type of correction at any point in the market. Nvidia has already corrected. The weekly looks pretty ugly. I would love to see this go down to like 100 to fill this gap here. Maybe here 106-ish. And I think it gets bought and it goes even higher. Uh, Apple could go all the way to retest the breakout point and then go bullish again. Google, Amazon, Meta look kind of the same. I meaning they're in distribution here and could potentially correct as well if they lose this horizontal rectangle area. Uh, Berkshire Hathaway looks with this pennant here looks interesting, but it can go either way. I don't have a bias. I would look at RSI to see if it gets rejected here, because we could see an RSI breakout first and then it goes up, or we can see it get rejected, and even though price doesn't immediately follow, it could have a breakout as well, retest this 368, 370 level, and again, this is perfectly normal, maybe even 386. LLY, after another huge run, it's been doing this for quite a long time. Do we have a channel here? We do, like this. So top of the channel, rejection candle. Seems reasonable to see a pullback here as well. Broadcom split on July 15th. Has a divvy next week, so -$5, whatever. I don't know. This one. JPM looks in consolidation, like it can do this, go higher, it can go lower, go back to this, go higher. Tesla broke down, then broke out. Now it looks like a pennant here. Also need to see which way it goes. They should do deliveries next week. I don't know if they do like on the 28th on or during the weekend next week, but that should be a catalyst for them to see which way they move. I don't think the deliveries will be good, so I would have a bearish bias, but it can move up or down before that as well. Like we seem to be in closer to the apex of the pennant than, and I don't think it weighs that long. Okay, then we have names like uh, Walmart, very high. We have names like SOM, which sitting on important levels. Oil got rejected on Friday. Can see go below this or double test and then break out and go higher. We have healthcare stuff that looks kind of like shit, but this is a back test of the breakout trend line. Imagine this goes lower. We go back to this 450 area, and if it loses this 450 area, it's not like it's gonna drop another 2%. It's going to do this. This is a week of distribution. It kind of looks like shit. Like healthcare. Do another one here, and then do this, and it will just break down. So a breakdown here is not going to be nice, and UNH is the biggest name in healthcare. You don't want to see this breaking down. Uh, what else? PG looks like shit as well. We had a bit of a distribution, but this I looked at this earlier, and this looks like a very shortable name. I think it has an impending breakdown. We have this. I'll put it like this. Bearish divergence here. It looks very, very weak. It will be an all-time high breakout fail. Oops. Yeah, all-time high. So imagine this happens. We go back below this level, and then it should absolutely crater. Right down to the trend line here. Something like this. It's not horrible, but it's not great either. And it should drag the market down if it does this. Maybe it holds the breakout from the all-time high. But definitely room to go down at least next week. How and how much we go down and how quickly will set the tone basically. Costco at highs getting rejected as well. It tried to break out of this channel. This is a long-term trend line channel, and it broke out. Now it's back below. this is not usually a sign of strength, and it should drop quite a bit, probably to 785. Johnson & Johnson's another healthcare name. Uh, this one actually broke down below this level, like this, or yeah, I'll leave it like this. But going below this is not bullish. Like look at speaking of fake breakouts, a fake breakout here, went below, cratered. Went above, got back below, dropped. Went above, got back below, dropped a lot. So we are in this scenario in which it will try to test 150, but given the relative weakness, we should be looking for a short at 150 to see if it gets rejected. And if it gets rejected, it's going lower, probably back to around here, to 130-ish. 45, 130, something like this. Oracle at highs, Mark at highs. HD, I called this one out. It broke out a bit and had a bit of a run, but I don't know if you saw on Twitter, lumber prices are cratering, fears of recession, and let's see a correlation between lumber and HD. Looks to be pretty correlated. A couple of times where it survived, lumber going down. Other than that, pretty correlated. And I give that example with CX and the oil name from Brazil, with the correlation from to their currencies. Now we have a correlation here, and we see lumber dropped here, then he made a lower high, and then HD followed. What we see here is the type of uh, divergence that is probably very profitable to play with puts. So I would wait a couple of days, but definitely looking for a rejection here in HD and to see if will break down. Thanks at all-time high. I have no idea. Fix is on my short list. Another interesting one is Coke versus Pepsi. We have Coke, which is going up, but sort of building a bearish divergence here, and looks like a exhaustive attempt to go higher, probably make a lower high like this. Even if it goes up at all, then when it loses this level, it should break down. So who is right between Pepsi and Coke? Let's see correlation between them. Obviously highly correlated. I'm trying to figure out if one of them leads. Don't see it. But interesting to see Pepsi crater and look weak, and Coke making new highs here. And how it closed on Friday is not very encouraging. Like it looks like a rejection from the horizontal level, and should at least go back to uh, retest the lows here. Maybe that is bullish divergence and goes higher. But This is like an arbitrage play between Coke and Pepsi. Okay, another interesting one is AMD. Nvidia all-time high, ARM all-time high. Um, who else? Micron. But the bubble is popping more or less. Like this is the type of thing we see when bubbles near an end, meaning some of the darlings of the sector start underperforming. And we have AMD, we have SMCY, which are nowhere near the highs, sort of looking weak. Um, and I'll look at Nvidia itself, but at the top in 2020. This was November, and this is what Nvidia looked like in going into uh, Jan. So it had already topped out. It was making lower highs. It had another huge leg down. This looks very much like the chart on SMCY now and AMD. So I'll pull it up, but this won't be synced. Let's do a screenshot actually. Actually, open a new tab. Let's look at AMD. This is Nvidia at the top, meaning it was one of the names that topped out before the market. Just like Netflix, just like Meta, and the market kept going up with different names. But this was a sign that we were nearing the top, and it looks very similar to the way AMD looks now. Meaning we had a pullback, we tried to make a new high and failed, pullback, tried to make a new high and failed, and so on. And same as SMCY. This looks very similar to this. The interesting name is McDonald's. We lost this huge horizontal level, and it's getting back to it. Question is, what will it do? In theory, this drop is not done. There was some bullish hints in this bullish divergence here, uh, but it could have already played out. If we do like a trend line here, yeah. So the bullish part can be already over and do something like this. To our target area 227. Okay, so I'm gonna stop here with the individual names. I think my point is clear here, meaning the potential for a pullback is always going to be there moving forward. We are entering a period in which uh, the bubble is going towards the pop phase. Some names are going to be underperforming, and good examples are AMD and Nvidia. And there are two triggers that could get us a bigger correction, meaning names that are uh, on the brink of breakdown, like UNH, McDonald's, uh, Coke, and probably a couple of the mega caps as well because they're very high. So the correction can come from names that are overextended up or names that are about to start a new leg down. And we have a combination of both here. It's easy to get the ball rolling. Secondly, any type of selling will cause a bit of panic. But we are aside from this, we are going into Q3, which is going to have a lot of money printing, and that means the bubble will not pop yet. I will. There's nothing really to modify here. I expect a bit more chop, potentially even a retest of 550. This is shortable and very likely to be profitable on a if we go up for some reason next week. It will be a very obvious bearish divergence. like it will almost certainly do this. We have a bearish divergence if we go equal high. I would not be short until we at least test this AVU up here. But there's a decent chance that we actually go to 520 and then we can buy this dip, we go higher probably, and so on. That's kind of it for this week. Hope you guys enjoyed it. Have a good one. Bye bye.